morning, guys. Later today at 2 o'clock Eastern Time, we have FOMC. Then around 2:30, Jay Powell speaks. You guys already know FOMC can be one of the most volatile trading day. If you don't have much experience with trading FOMC, I advise taking the day off. Okay? I advise taking the day off and observing. If you really want to trade this, I recommend sizing down. Okay? If you are not good at risk management, I recommend taking the day off as well. All right? If you trade with your ego and you're still working on getting better and not doing it, but you're not quite there yet, I recommend taking the day off, sizing down, or practice trading with the paper trading. I don't know. But if you do guys decide to trade this, we got to remember to trade this unbiasedly. Trade the setups. Do not lead with greed. FOMC, when it released at 2 o'clock, can make a big move to one direction, and then when Jay Powell speaks or after he's done speaking, it can reverse on you. Trading with the traps is one of my favorite ways to trade this market. Because the market, I told you, they do one or two things. They either in the consolidation phase, the chop phase, the contraction phase, whatever you want to call it. And then from that phase, they go to the trend phase, the expansion phase. But I like to call it the trap phase because that's literally what they're trying to do, is trap as many retail traders as they can. Get people in their feelings before they give us the next move. Once they get enough people screwed up in the head, emotional, that's when they want to make their move. But we got to take our emotions out of it and focus on the charts, the levels and the setups and the level-to-level targets with runners in case you want to go for a home run move. Okay? We got to keep this approach because, like I said, with FOMC, it's going to be volatile, it's going to be big, and it's going to hurt a lot of people. So your job is to know the behavior of the market and use that information to your advantage. To know what the traps are and to trade with the traps. As of right now, bears are probably talking about a double top. That we hit all-time highs again. Is this a double top? My response to them is that if it's a true rejection, we will either get a gap down or a breakdown of support. We need to look at the price actions behavior. 7 up days in a row. 7, 8 up days in a row. I can't even count right now. If it's going to be a pullback, it has to break down support. You guys know 563 served as a strong resistance level multiple times. And we barely closed above it yesterday. So if we're going to be bullish, we need to stay above that and clear 565. And apparently 566.5 because that was yesterday's high. That will put 568, 570 in play. But I do have the next big fib level at 578 if 565 clears. All right. If we clear those levels, don't argue with the price action. And especially if FOMC is backing it up, get in, get your profits, get out. If you want to go for a home run, leave runners, guys. Don't do it with a full position. Secure your profits so that your runners you can hold your runners comfortably. And for calls, like I said, we got to clear 565. Stay above 563, clear 565. Now, if we break down 563. If we break down 561.5, which held yesterday as support. If we break down 560, look to short, especially with FOMC backing it up. Now, when Jay Powell speaks, guys, if there's going to be a reversal, you need to either watch out for a false breakout setup or a false breakdown setup. Okay? A false breakout is when we clear a resistance and we break it back down. That's our trigger to go short. A false breakdown is when we break down support and then we recapture it. We break it out again. That's your trigger to go long or calls. So when Jay Powell speaks, watch out for any trap moves. Okay? If there's no trap moves, there's no trap moves. We follow the price action. We keep holding whatever we're holding, if you are holding anything. But if there is a reversal, you got to be able to cut loss. And if you're not in a position, you got to learn how to use those trap setups as entries. Trade with the traps is the secret to trading these day-to-days successfully. All right. Triple Q, still I have resistant. All right, 474. Well, it's above 474, but I guess it's support with next resistance at 475.5 and 477. If we clear those levels, guys, bullish. Look to long, especially if FOMC is backing it up, which is at 2 o'clock Eastern time, guys. If we break down support, especially 472.7, look to short. I'll definitely be bearish below 471 and 469. All right, guys. NVDA. It's a below 116, not a good sign. If there is follow through, 114 and 112.5 must fail as well. Below 111, I would be bear buys. And I think we could go back all the way down to 100. Bullish, get up. It got to get above 116 and clear 118. If I don't see that, then I'm not bullish. But it got to clear 118 and 120 to trigger a move to the upside. Okay, guys, remember, NVDA is a volatile stock in itself already. With FOMC today, it's going to be even more. So if you can't handle that, do not trade this stock. If you can, this is the stock to trade. It's going to be wild. It's going to be fireworks. Tesla just consolidating, trying to figure out what it wants to do. It needs to break down 226.5. Daily chart closed below for me to be comfortable recommending puts or entering puts myself. And I would target 225, 223.5, 220, and possibly all the way down to 216. But like I said, play it level to level. And if we try to go for the big move, leave runners. As far as being bullish goes, staying above 228 is a good start. Got to clear 230 again. Yesterday it cleared 230, managed to pop up, $4 or $5, but it couldn't hold it. So it got to clear 230 and give us those high closes. If we get that close above 230, I'll be a little more bullish with 232, 233.5, 235, and 237 in play. I would definitely target 237. With FOMC today, it could possibly hit those levels. So pay attention. We break down 228 and 226, look to short. We clear 230 and 232, look to long, guys. And IWM had a strong rejection from that fib level around 221.8. If there is bearish follow through, getting below 219.7, breaking down 218 would definitely be bearish follow through with 216.7, 215, and 212.6 all in play. Okay, guys, look to short if 219.7, 218 fails as support. All right, if we clear 221.8, then yesterday's sell zone is canceled. We clear it, that shows that there is buying pressure, and we can go up higher, up to 224.5 or higher. Guys, if you are new to trading, especially trading FOMC, today is the day to learn. Okay, if you are going to trade it, size down, be tactical, be strategic, play the levels, know the setups, and trade it unbiasedly. Bye.